Hello friends, today's topic market crash for last 3 consecutive days. 5 reasons. I am Dr. Bharath Chandra. Purpose of the video is service to society and financial education. For the third consecutive day, Nifty fell today down by more than 1.7% in just 3 days. As of now, as for the candlestick formation, it is showing a bearish pattern called 3 black crows. This is actually not a very positive sign for the market since candlesticks are signaling chance of further weakness in markets. Nifty graph last 1 month and you can see in that the last 3 candles are 3 black crows, which is bearish. The following are some of the major reasons for the market weaknesses. Number one, FII selling. According to experts, the biggest reason behind the recent volatility in the Indian stock market is the strong sell-off by FIIs. The last 3 trading sessions in May, FII have sold off Indian equities worth around 2,500 crores. At the same time, DIIs have not invested much in the last 3 trading days. This has caused retail investors to become nervous. As per the past history, generally FIIs don't buy before general elections and results. They usually wait for the election results even if they have to pay a premium later. Number two, quarterly results not very good. The quarterly results of many companies were quite dull or weak. It was not very impressive. There were no major positive surprises for market from results. In fact, many companies reported below expectation results which pushed their stock prices significantly lower. So the markets have got sufficient reason for weakness. Number three, nervousness during elections before results. Since the general elections are going on, there is some volatility due to elections. Even though the market has fairly discounted the return of NDA government to power, the slightly low turnout in the first 2 election phases may have caused some nervousness among retail investors. The markets are expecting a NDA victory by a huge margin, but as of now, it is not very clear due to the lower voting percentage. There are still 4 phases of elections pending. It will be spread over the next 4 weeks until 1st June. The volatility could increase as the election progresses and the date gets closer. Number 4, VIX up from 10 to 70. Gradually, since the last 9 trading days, India VIX, which is the volatility index, has been rising. It has gone up from 10.1 to around 70. Nifty movement and India VIX are inversely proportional. It means that when Nifty index moves up, VIX falls, and when Nifty falls, VIX rises. As per expectations, the VIX may have increased due to elections. 5. Lack of further positive factors. Federal Reserve has hinted that interest rate cuts may not happen until very close to the year end. RBI also is expected to take similar decision. A stable government formation is also most likely. Hence, markets are factored in all this. It requires some new positive factors if it has to rally further. Many investors may be booking profits in the short term to avoid uncertainty during the election voting phase. Top losers in Nifty 50 index in the last 1 month is a surprise to watch it. HCL Tech minus 13.9%, Titan Company 12.9%, HDFC Life Insurance minus 12.2%, Adani Enterprises minus 12.1%, L&T minus 8.4%, Kotak Mahindra Bank minus 7.9%, Apollo Hospitals minus 7.8%, IndusInd Bank minus 6.4%, Adani Ports minus 6.4%, Sun Pharma minus 5.8%. This is only a sample. You can also watch other stocks having come down. There is a chance that markets will stay dull or weak and trade in a similar range until the election results. Maybe after the election result comes and it is a victory with a good margin, then there could be a rally in the markets. End of the video, here is the question. The last few days, what action have you been taking in the markets? A. Investing. B. Just observing. C. Selling. If you are not the member of this channel, this is the time to subscribe. Press the bell icon. Send the video to all your friends. The video is good. Press the like button. Thank you for watching. Bye bye. All the best.